Let's go.
On with
All
the
right.
show. All right.
I'm going to get things rolling. We're going to talk about how we talked last year, or you guys talked last year, January 2025. It was the 14th to be exact. Brian, you just read Barron's. There was an article in there setting up the year 2025 as one that was going to be an investor's hell and a trader's paradise. Now, this was a really interesting thing for me to listen to because it talks about volatility and how Barron's was saying this is going to be a market that's going to see all these events that are going to just shake the markets up. And that's exactly what happened. An investor's hell happened. We saw a 50% increase in actual volatility when you look at the S&P 500. We saw volume not really increase, so it wasn't the institutions, it was individual investors that were out there that were trading. And when you fast forward to the end of the year, this was in CNBC or on CNBC just about a month ago. What do you know? You were exactly right in calling this a trader's paradise or relating that story because we saw individual investors, namely, I'd say investors like we have here in our group, that actually started to outperform Wall Street. The hedge funds weren't doing well. They were sitting there shorting stocks all through the summer. And as you said, being out there and being active, your guys' case, I think, was 253 winning trades, so a trade a day. And it kind of shows the power. I love to go through this. It shows the power of not only the like-minded thinking, but the community that you guys have built here. When you look at one point, though, that was made after this, and it was Karim. And I've got a couple things that I want to circle back with Karim on. He's thrown me, as you know, in a rabbit hole over the last 24 hours. But look at what Karim gave everyone as a trade idea on January 14th last year. And it was the idea of hedging this market. He was very cautious, looking for a 10% drop in the S&P 500 and told everybody, hey, go out there, purchase a debit spread on the S&P 500, a bearish one, that used the strikes that would give us some protection here. I've got the data. If you look at it, I looked it up, Karim, and at that point, it was trading the 580 put, buying that, selling the 525 put. Those were the Jan 26 expiration. Cost you $14 or just under, and returned 115% at that April bottom. Tariff tantrum paid off for everyone. Look in hindsight here, are you guys seeing the same thing as in 2026 as we saw in 2025? What's your feel as it relates right now?
So the way I look at the markets is that it's very rare in my investing career that you don't get a 10 or 20% correction some point during the year. So at the beginning of the year, I was put on the same hedge. And I'll give you that hedge right now, because I think this year we're going to have another sometime at some point this year, a 10% move down in the S&P, or maybe even a larger move down. There's a lot of SHI blank T going.
You can say the word, Karim. It's okay.
I mean, like Bernie Sanders is in the White House, I think, proposing, a 10% credit card cap, and then Elizabeth Warren showed up and said, let's use federal land. I mean, these are all progressive ideas that are now coming out of the White House, which is just crazy to me that this is all happening. So that's only part of the stuff. And you look at what's going on in Iran, which is going to be a very short-lived situation no matter what happens. They bomb the crap out of Iran. It's going to be a 2-day event. Oil is going to spike up, come back down. But all of these things, the tariff reversal that could be on the horizon, all of these things are going to have an impact at some point on the market, whether it's short-lived or longer term, because the market operates on psychology. And you can look at that with different asset classes right now. Psychology is kicking things into high gear, crashing other stuff, whatever. So that's what Brian and I like to play. We like to play psychology as much as fundamentals. I focus on fundamentals. But for this trade, I'm going to give you the trade that I'm going to do. This is based on just historically, every year, the S&P corrects at some point. It might have already started correcting. I don't know. But at some point it does. So this is the trade that we're going to make this year. Okay. And it's the SPY trade. So I'm going to be buying the 2027 January 680 calls and selling the January 2027 puts. Calls.
Puts. I was going to say, you're selling, you're buying the calls, huh, Karim?
It's the new one. Yeah.
That's psychology.
Right. We're buying the 680 puts that expire in January 27, and we're selling the 600 puts that expire in January 27. And you should be able to get into that for about $18 right now. Okay. So again, 2027, 680 puts, 2027, 600 puts. It's a put spread, bear spread. And it's going to cost you about $18 and change to get in. So at some point this year, I think you're going to see a 10% correction or more, or even maybe 5%. Whatever size correction you're going to make, if it occurs in the early stages of this year, you're going to make money on this trade. If it occurs later, we're going to need a bigger correction. But basically, your break even on this is for the SPY to go from 680 down to 662 or thereabouts is your break even. So anything under 662, you're going to start making money on this.
Yeah, and it's interesting, Karim. Like you kind of put a similar trade out during our forecast episode this time last year. CJ just kind of broke down how well that trade did. I think, from my perspective, this trade has a higher chance of success in this calendar year than it actually did last year. And the reason I say that is because I tend, every beginning of the year, I tend to look at historical trends when it comes to presidential cycles, right? So this year, 2026, we are in the midterm election cycle of this current presidential term. And if you look back at history, the S&P 500 only finishes higher during these midterm cycles 53% of the time. So it's essentially a coin flip whether the S&P will even end the year higher this year. And if it does end higher, the average gain is only 4.6%. Compare that to other S&P average gain returns, which are in the 7-8% range. So even if we do close higher, it's going to be not as high as we have in the past. So when I see the fact that we're coming off 3 strong years in the markets, upside. Granted, the April tantrum last year caused havoc for buy and hold investors. They couldn't sleep during those 2 months. But as we start this year, we're in the midterm presidential cycle, which historically are a coin flip. If they're up and down, even if they do finish higher, it's a very low percentage. So a spread, a put call spread that allows you to profit if the markets do pull back, I think that has a really, really high degree of success for this upcoming year.
Let me throw a curveball, because this is you're looking at the midterm right now, and I think people are expecting a little bit of a changeover in Congress, a little handover from one party to the other. And there's all kinds of volatility associated with rumors and headlines. We talked last year, there were rumors and headlines kind of drove things. When you start to see headlines about what the administration might do, I've just recently seen something on, hey, maybe they could cancel the elections. They could say, hey, it's not in the best interest of the country. Does that absolutely, Karim's idea at this point, where its volatility is going to pay off, what does that twist do for the market?
I think the twist adds uncertainty to the market, and any sort of uncertainty will be a near-term downside move. Now, of course, we've seen with all the tantrums in 2025, the tariff stuff, markets eventually do correct. But on those days that the sell-off is happening, it's pretty stressful unless you have a position on already that Karim just look at Karim. Like, you never see Karim dance.
Safety blanket.
Right? Yeah. So if you have a safety position, you have a safety net, and traders like us are always going to be covered.
And cash, you got to have cash. You don't have cash when the market corrects. You just blew it. Yeah.
Well, and Karim, you always love to post your buy list whenever we're seeing pullbacks like this. I'm sure
we got my wish list in the war room. Yeah, if you had bought the stocks on the wish list in the war room that I posted last year, you would have got into Tesla at the lows. You would have got into Barrick Gold under $15 a share. Okay, you would have got into so many things at really low prices, it would blow your mind. And the day the market was at its low, on April 14th. April 14th, I posted a buy list. On that buy list was Reddit, Tesla, Google, Amazon, 7 or 8 different stocks, and every one of them has either doubled or tripled from that date. So, you got to be in the game to play, but you got to be in the game at the right price.
Right. Well, and that's the thing about our community too. We want to be there the day that it's time to make these moves. That's why we're doing these live streams. That's why we come every Tuesday, Karim, live and do cash outs. That's why we're in the war room every single day posting, because timing is everything. And if you get your timing right, which we have done a lot, there's a lot of money to be made.
Yeah, it goes back to that original message of a trader's paradise, and you guys really have kind of formed it here. And that immediacy, when everybody else, the investors are running out of the market, that is the time to go in there and say, hey, what makes sense to buy? What's the opportunity right now among all this blood in the street? It's yeah, just I sit here and think about the opportunities, and they come, it feels like they should be almost on a daily basis right now with all the headlines. But at the same time, have you noticed, and this is my last question on the market, but have you noticed that we've become a little more resilient? It feels like headlines, it should topple the market. We kind of look at for an hour or 15 minutes, and then all of a sudden everybody's back to buying. Is that something to worry about?
The case. There's so much, there's so much buy the dip mentality out there, right, that any dip is bought. And that's why you can't just say, oh, we're going to short the market, this is a bear market, because it'll take 2 or 3 buy the dips before people realize, oh, this dip is not back.
Before you trip.
For now, I'll be buying every single dip for sure. Yeah.
Right.
So CJ, I would, it's an interesting point. I would argue that the market's always been resilient in some fashion, but I think the current market, the makeup of the market, how news flow gets disseminated in these day and age, how there's always a new breaking, every time you look up, it's breaking news. I think it's not resilient. I think it has a shorter memory, like the time span or the memory span is way shorter. So the news that impacted the market an hour ago is now like old news.
Oh, you know what? Brian, what else? The market has developed a really good bullshit filter. Okay.
Yeah, that's what it is.
Just earlier this week with the Fed.
Yeah.
There's a criminal indictment of Jay Powell, blah, blah, blah. Well, the market didn't go down 1%. Okay?
Yeah. So like you have a situation where news is breaking, half the market doesn't believe it anday, so it's already cut.
If this happened 10 years ago with that announcement, it would have been down 20%.
Oh yeah,
that day.
Right.
We barely blipped down, and it was bought right back because the market's looking through all this stuff. Because there's so many of these announcements on a daily basis that don't pan out. So market's like, okay, well, what are the odds? The odds of it panning out were like on everybody's favorite Kalshi or Poly market. The odds were like 7% odds that Powell's going to get.
It's a short-term memory market right now, and if that means it's more resilient, I don't know. But we flow from one news item to the next at such a rapid pace that oftentimes, like you said, the BS filter just sweeps out under the rug, and it's old news by lunchtime.
Yeah. It's like Tom just asked, what's the market going to do if we invade Greenland? I mean, what, 30,000 people? How hard is that going to be to invade? I mean, it's just stuff like this. It's unfortunately a joke, okay, and it's not a fun thing to talk about, but it's a joke. If we want to invade Greenland, we could do it in 20 minutes, okay. But the ramifications of something stupid like that could last for years. Because we already have access to whatever we want in Greenland. Why would we want to invade them?
As traders, Karim, I always look at the risk reward scenario, and that risk reward scenario is so far off the charts on the risk versus minimal reward. I think that's why the market's just like, okay, whatever, on to the next, idea.
First of all, it would be gaining like another blue state. If you want to if you say Greenland should be the 51st state, Canada should be the 52nd state, well, they get free healthcare over there, and they get massive social safety nets. They get 2 years off for paternity leave and maternity leave. I mean, really, who do you think they're going to vote for?
All right, we're getting way off track here.
Yeah, let me bring it back together, because we talk about safety nets, and this goes back to psychology and all of that. And I'm going to switch over to the screen here again for a second. We had the Magnificent Seven that got us through 2022, 2021. And I think honestly, if we go back to the pandemic, that probably is the source of that, taking the shock out of investors, and they don't worry about much anymore. Reminds me of Mad Magazine, What Me Worry, Alfred E. Newman. But deep in the psyche, I think that kind of numbed everybody. But the Magnificent Seven is no longer the safety blanket for the market. Remember the days when everybody would just start talking about the Mag 7 and the market would start going back up again? Now they're performing like average, dare I say, 18% over the last year.
They're almost leading.
2025.
Yeah, a lot of it recently, what I'm seeing is it's leading the market lower. Like
Right.
today,
I mean,
Microsoft
Microsoft,
down
yeah,
1.5%.
Microsoft's breaking down. You've got the NASDAQ 100 now breaking down. How much of that starts to erode if that goes away, let's say? And I only brought the screen up. I kind of moved forward. But that 18% is no longer a standout. Do people start to lose faith then?
Well, I think they might in the short term, because you're going to have, you've had so much hype in that sector, and some of it is well founded. It's not just hype, but when you've got some crazy moves going on, like the craziest move that went on was when Oracle went from 180 to 320 and back to 180. This is a major big cap stock.
Yeah.
And it's trading like an illiquid Vancouver Stock Exchange when it existed.
To see market caps move like that, like it's just unheard of.
That tells you that there's so much hot money in the market. But what always comes back is markets will always trade. Stocks, markets, everything will trade back to their mean. Okay, this is called reversion to the mean. And that will happen at some point. Sometimes that takes years, sometimes it takes months. So what you're seeing now is less of a focus on, when I look at the AI trade, what scares me about that trade, okay, is that there's so much. You've heard of these Korean K-balls and the Japanese Kiretsus. These are when in Japan and in Korea, each company buys shares in the other company, so that if they all do well, they all go up, and if they crash, they all crash. So they all have an incentive to support each other. And that's what happened in the AI sector. So much money was flowing from Microsoft to OpenAI, Oracle to this, or they were all investing in each other, from NVIDIA to all stuff. So there's not as much transparency. And that's what's scary to investors like me. I'd love to get into a trade, but I don't know the transparency just isn't there. I don't know who's got shares of what.
Karim, can you do me a favor and promise me never to talk on a live stream about your K-balls again? Can we come to that agreement right here and now?
Brian, where is your mind, man?
You're bringing this stuff up, man.
K-ball.
CJ, I'll get this back on track. I think the AI trade, the Mag 7 trade, for the last 2 years, that sector has masked and put a Band-Aid on a lot of potential market problems and allowed people to kind of like, ooh, look the other way, shiny new toy. Look at how well Oracle's doing. Look at how well NVIDIA is doing. If that sector begins to lose its luster and people lose confidence in dip buying that sector, then we could have that moment that Karim is describing where we could see a 10% correction. Because if you can't rely on and lean on your leadership group anymore, then it could push everything down. And if that day comes, Karim, having your S&P put spread is going to be a great protective asset.
People are commenting about the spread. It's a debit spread. Okay, your account is going to be debited the amount
you're
of
paying
the
money. You're buying one. Money. You're selling the other.
And it's called a bear spread. Okay, as well, because we're buying puts and we're selling against them, but it's a debit spread. Yeah, but Brian, today if the market corrected 10%, it's like nothing.
Yeah,
it's just nothing. It's a blip for most people. Even in April of last year, how long did that blip last? It lasted like 3 weeks.
Yeah, I was gonna say like a month.
It went at 20%, and only lasted 3 weeks.
Yeah.
So people are now.
A month later, you were
so
positive again.
So I'll buy the dip until it's not.
So let me tease something then. And by the way, we will be putting a repost of this up in case people want the details on that trade, as well as some writings that'll go out on it as well. So you'll get the details here. But to you, Brian, 2 weeks from now, we're going to start seeing earnings from Microsoft. We're going to start seeing earnings from that Magnificent Seven. Is this something that we need to watch? Everybody always says, if you turn on CNBC, it's the biggest earnings season ever. It's the most important earnings season ever. With Oracle kind of being outed, and tipping the first domino on that cabal, if you will. Sorry. Um, if Oracle kind of started to get us looking behind the curtain, because that really was the event where everybody said, "Where's this money coming from?" And then they started talking about Google and everybody who's paying everybody, Nvidia at the circle of that. How important is this earnings season that's coming
It's
up?
huge. It's hugely important. We all know the S&P gained 16% last year. All right.
Mm-hmm.
What we don't know is that only two Mag 7 companies, Nvidia and Google, outperformed their benchmark index, right? So you're already seeing the very beginning stages of underperformance in this 3-year leadership group. Now, if these companies come out, and even if they're not growing as much as they were growing last year, that could lead investors to overreact and say, I'm going to take my profits off the table. It's been a great run, time to cash out. So yeah, if we don't see these earnings reports come in and continue to support these high growth, high expectation like leadership groups, that could set the tone for at least the rest of the Q1 into Q2, and that could be where we see a repeat of an April pullback, for example.
You know whose earnings are not going to disappoint? Anybody in the gold.
Any of your gold company earnings.
If any of them disappoint, that's a big problem. Okay.
Yeah.
It's a big problem. With that, I'll throw it over towards the sectors because we do want to talk about hard assets here and a few other things. First, I'm going to go into defense. That's become a hot button here, especially over the last 2 weeks, let's call it. You've seen the White House say that they're going to raise the defense spending by 30% in 2027.
Almost 50%. It was a huge number from what I
thought it was 50.
You wrote about this just a couple days ago, Brian. In terms of the defense, and the DFEN is the ticker symbol that you're looking at there. Is this is this high on the list for 2020?
Oh yeah, Siri, I'll put this in the chat right here. This is
Are they going to borrow the money from Brian?
I'm broke, Karim. I got nothing.
They got to borrow it from somebody.
Yeah, well, they'll just print it. I can't. I'm trying to put something in the chat. It doesn't go in, but the ticker is D as in dog, FEN, and this has been one of my favorite leveraged assets for a number of years. I trade it as often as I can inside the war room. Thank you, Fitzy, for putting that in. Moderator, nice. It's there's not too many defense and aerospace ETFs that you could trade. There's maybe I can count them on like one hand. I think there's 2 or 3. DFEN is a leveraged defense and aerospace ETF, so it moves at 2 times the rate of the benchmark sector. So you get a really great bang for your buck, and you get to own a collection of the top defense and aerospace companies in the entire world, essentially. So if no matter what happens with this Greenland news or any other geopolitical conflict throughout the world, we seem to be getting ourselves involved in a lot of these, and it all leads back to like a safe, stable stability play in the DFEN. And what I love about it is you don't have to pay $400 a share for Lockheed Martin or these other guys. It's a very reasonable asset. It moves at a high rate, and it's a great trading vehicle. So for me, 2026 defense, we've been on it from the beginning, and I continue to like it in this calendar year.
Karim, any thoughts there? I'm sure you're.
Well, I mean, we don't have the money. We already have a blank ton of weapons. It's not like we don't have weapons that we can already use to, I mean, what will take like 20 planes, 1 amphibious assault craft, and a lot of parkas to invade Greenland. Who are we invading with all this weaponry? But again, my big thing is you don't want to screw with the bond market. And when you start making these big promises of how much more money you're going to spend and the revenue's not coming in, you're going to break the bond market. It hasn't broken yet, but you're going to break it. And it's not going to be pretty when that happens, because the bond, the long bond, 10 years to 30 years, that's what ultimately will determine the course of where stocks go over time.
To that point, I mean, we talk about that's liquidity. We're talking about liquidity at that point. When you look at the TLT, that 20-year end of it, the tradable, the ETF, I think we've been balancing right on moving into a bear market again on that particular, that, if you will, vehicle. And then you hear also rumors of the Fed starting to inject a little money through the overnight windows here. And that's where I think your liquidity becomes a problem, and that becomes a problem for stocks. I just looked up the DFEN and its top holdings. You've got companies like GE, which is
Yep.
GE Aviation, Raytheon, Lockheed Martin, Boeing Air. I mean, they're all the companies that are, let's say, they've got great lobby interests up in Washington, D.C. on K Street, right?
It's the best, most leveraged, most powerful way to own the entire sector all with one play. It's awesome.
And like you said, no options. I mean, you get the leverage without having to trade options on it. So
yeah, so you even could trade options on it too. We do. So you get the leverage of you could just buy it and hold it, and it moves up at a 2x rate. Oh, granted, it also moves down at a 2x rate on the days that those are correcting. But you could also trade options on it as well if you want, and even get more leverage. So there's no pun intended, CJ. There's a lot of options when it comes to trading DFEN.
So DFEN we've got on the list. I'm going to bring something else up, hard assets and precious metals, which obviously is another one of those areas. I wrote this a couple weeks ago, and I'm wondering if I'm going to start to look like a fool writing it right into a top here. I listened to you guys on your stream yesterday, Catalyst Cash Outs, and Karim. As I said, you threw me down a rabbit hole, my friend. I mean, I am looking at silver right now and saying, wow, this is just too good to be true. Can it continue to run? The answer is always yes. Overbought can become more overbought, oversold, yada, yada, yada. But I started looking at the correction likelihood yesterday just off of what you said. And real quickly, if I can explain what I did for you guys, I sent it to you yesterday. Brian, it's a spreadsheet of all things, but it looks at the total historical price patterns for any company. I can drop a ticker symbol in there and it puts it in. Looks at 3 days worth of daily prices. It uses a log natural, or it adjusts it so that it squashes everything down, and it picks up correlations. And it basically says, hey, show me any time where we had a 90% correlation to what we've seen over the last 30 days in this particular issue. Silver just rang a bell. We've seen this pattern, let's call it this pattern play out, where we've seen a 90% correlation to what we've seen right now 20 times over the last, since silver SLV started trading. The interesting thing here is when you start to look at that pattern and just say, hey, if I buy or sell, or tell me what the price is after we've seen this pattern. It's almost a coin toss. Let me put up a little bit more of the data here. And for the data nerds out there, you'll love this. About 42% of the time, we actually see SLV trade 22% higher. 58% of the time, we see it trade down by 6%. Now, to me, the downside is still limited here, 22% upside. And those are averages for all the 20 signals. I'm looking at this and saying, okay, but you'll notice each one of these little arrows are those signals. Just saying, hey, 90% correlation. Those pullbacks have been great buying opportunities over the last 5 years. But there's another little subset here. What I did is I looked at whenever we've seen an extreme case of this, that chart's not going to come up, of course. We've only seen 3 times where this pattern is matched, where SLVs traded 50% or more higher over that previous 3-month period. And in each one of those, we've actually seen silver pull down 100% of the time. But in all those instances, it's still given us a bounce back. So 2 things I'm going to ask, and I'm going to throw it Karim's direction. Tell people about grit and the G in grit, right? Because this is it's a good problem to have when you're holding positions like this that have gone parabolic. Some people, it's hard to remember. Yesterday, we all heard, pigs. You don't want to be a pig going to slaughter, etc. But tell us a little bit, Karim, about your position on silver right now when you look at all of this.
So, I trade silver based on where I got in, not where the price is right now. Okay. So I bought silver when it was $2.30 an ounce. Okay. I actually walked down to my coin shop today and sold a big chunk of my silver, and I got $87 an ounce for it. I'm not crying, okay? I'm happy. But I also own silver stocks, and I told people to buy Hecla when it was at $6. This was in June of last year, right? And I owned Hecla at $2.61, and Hecla's at 25. So my whole thing is, I'm not shorting silver, okay? I'm creating a hedge so that if my silver positions go down, I won't lose as much of the gains I already have. And if my silver goes up, I'm going to make money because the hedge I've got doesn't cover my entire silver position. It covers the profits that I have in silver. That's it's a big distinction. People think when you hedge against your position. Yeah, if you have no profits, you hedge against your position. But if you have profits, you want to hedge against your profits because you know what your cost is. And you don't ever want to go down to your cost. So let me tell you a couple things about silver, okay? When silver corrects, it doesn't just go down $5 an ounce, okay? It goes down 20, 30, 40 based on a percentage. So if it was $20 an ounce, it would drop to like $12 an ounce. If it's $100 an ounce, it can drop to like $70 an ounce. And not like in a month. I'm talking like in a couple of days, okay? So let me give you some facts about what's going on in the silver market so that everybody, including you, Rabbi, whatever your name is, that was saying, what about the silver short, okay? These are facts. I like to deal in facts, okay? Does anybody know? Type in what year and below the U.S. minted coins that were 90% silver in modern history. Anybody?
Below what year?
Yeah, like
Okay.
1964. You got it. Okay. So all these coins, very good. This is great. You got a lot of educated people on here, which I really appreciate. Okay. So I had a big bag of them. Like I had like 80 ounces of these coins. Okay, it's been sitting in my desk and other desks and previous desks for the last 15 years. Okay. And I bought this bag for like $25, all right, whatever it was. And I sold it today for, I don't know, 4,000 or something like that. Okay. So these coins contain 90% silver. Okay. These are quarters, half dollars, and dimes. There's no nickels in there. At 90% silver, with silver trading at $90, let's say today, all right? The intrinsic value of that coin is $81. Does that make sense to everybody, right? You go to your silver dealer today, guess what he's going to pay you per ounce? Anybody? If it's worth $81 per ounce, guess what he's going to pay you? Throw out a guess. Chad, you're really close.
Chad says 50.
He's going to pay you $50 an ounce for it.
Yeah.
Right? $50 an ounce for something that's worth $81 an ounce.
Doesn't sound like a fair deal to me, Karim.
Why is that? Because this guy is going to sit on that, all right, for 30 days. Okay, he's going to send it to a warehouse, and guess what? The warehouses are not even accepting it because they've got a 6-month oversupply of silver. Okay, so if you got a 6-month oversupply, they're paying you. Okay, they're paying you 50% or 60% of what it's actually worth. Okay, that's telling me that everybody and their brother is out there scouring the drawers for sterling flatware, pulling their silver out of their teeth.
Check my drawer, Karim.
Okay.
My toenail clippers,
right.
my
toenail clippers, taking it down there. And I see a lot of people are very disappointed. No, I swear to God, I saw a guy who walked in there before me, and he walked out. He was really disappointed.
Sure, they're giving him half the value.
Okay. And he didn't. Now, I also sold some pure silver. Okay, pure silver. Pure silver is 0.99% silver. Okay, I'm not reading the comments here because I'm so excited about it. 0.99% silver, which means almost pure silver. Okay, silver is trading at $90 an ounce. What do you think they are paying for pure silver coins right now? Pure silver. Anybody?
Same same shop that you go to, or a different one?
Different one. This one does coins. This is a coin store. They're paying you, okay, $81.
So they're taking 10% piece.
They're taking 10%. Do you know what they were taking off during COVID? Anybody? When silver was 18 during COVID, what do you think that they were selling the same silver coins for? Silver was 18 during COVID. What were they selling silver for during COVID? Anybody?
We had a 9.
$36. Then $18 premium on silver. Okay. Because obviously people couldn't get to the store and stuff like that. So historically, this is historic. I trade coins all the time. I bought Krugerrands when they were $250 an ounce in 1994. Okay. So I have some history of this, right? Usually on silver, when let's say when silver was at $20 and it was a normal market, they would charge you 50 cents premium. Okay, 50 cents, 2%. And they would buy from you with a 2% discount. Now, on these coins and stuff, on the bullion, they're charging you 10%. It's a 10% discount, not even a premium. This is telling you they can't get rid of this stuff fast enough. They don't want to take the risk. And I sympathize with. I was talking to the guy. I go, hey, he goes, "I'm sorry, I can't pay you more." I go, "Dude, I understand. You're going to take the risk. If silver can go up $30 in a month, you know what? It can go down $30
Down
in a
too.
month."
Yep.
Right? Think about that. So yeah, for those of you thinking, "Oh, this guy's crazy for shorting," I'm not shorting silver. I'm hedging it. Long term, if silver fell $30 tomorrow and if gold fell $1,000 tomorrow, the long term trends would still be intact. Gold is going up for a very good reason. Okay, it's going up because people who buy gold are scared out of their minds. People who buy silver are speculating because they can't buy gold. Okay, if you look at the commitment of traders, okay, we're just telling you what the traders are doing. They're short silver. Okay, it's just fine. They want silver to go to 100. It might go to 100 this week. I'm buying puts and hedging going at 2027, 2028. I'm going to share my screen with you for my last little rant on silver, okay? If I can.
Karim, I've never seen you this animated. We should talk about
because,
silver more often.
People like animated, right? Okay. Okay. Tell me if you can see this screen. Can anybody see the screen?
Yeah, the numbers are blurry, but we can see it.
Okay. Well, basically what you're seeing is the silver futures. Okay, January 2026 right now is 89.46. That's the current price of silver. You go out to September, $93. You go out to December, $94. What? This is what traders are saying they think silver is going to be a year from now, 6 months from now. Okay, I mean that should tell you these are professional traders. So yeah, they could be wrong in the short term, but they also know what I know, that these warehouses are being filled up with mom and pop. I don't drink coffee, with mom and pop silver. Okay. So you've got to be careful with where you're going on this. Silver could go higher. It's great for a trade. But when silver corrects, and gold's probably going to correct too somewhat, but when silver corrects, it's not going to be pretty. So yeah, the long-term thesis is great. But the short-term thesis, just be careful. That's all. And take some money off the hedge.
The important part of what you're saying is you're not hedging with like new money. You're hedging with current profits, and you're only taking a small percentage of those profits and protecting against a sudden but brief pullback where you would then sell your puts, take the money, and then just continue riding it higher. That's smart trading.
I'm going to buy it back. I'm going to buy all this stuff back. It's not the long-term trends. So I'm betting that it's going to go down so I can make money when it goes down and then buy it because I think it's going to go back up again. Okay. So some people are very myopic and they think, oh, Karim's shorting silver. Ha ha ha, silver's up $5 today. Great. Yeah. I'm making a ton of money on the silver I have. Okay. Yeah. You guys have to look at the whole picture. Okay. When you, what's that thing that Kellyanne Conway said? Selective facts. What was it?
Alternative facts.
Alternative facts. When you only think about and believe in alternative facts, okay, the market's going to screw you left and right.
Yeah.
All right.
We're not 100% higher or 100% lower. We like to adjust and do both. Sorry, CJ, take it away.
That's okay. I want to, because I don't want us to run out of time. I want us to hit a couple of stocks.
Oh, we have all the time.
This is a great segue though to Karim. Back to Karim. Sorry, Brian, just for a second here. Seabridge. This is one of the, I mean, when we're talking gold, and you said something awesome yesterday. Both of you said something awesome with Seabridge. You guys are playing with the house's money because some people were talking about how they got into this a little bit later. Give us a view here on Seabridge.
Seabridge was also a recommendation in last year's forecast issue. Right. I don't know what that made for people, but it made a ton of money for people. Okay, so Seabridge Gold is really not a gold play, even though it goes up with the price of gold and goes down with the price of gold. This is purely a deal play. They're either going to make a deal or they're not going to make a deal, and it's already up 3x from its lows last year. Yep. And so nobody in the war room, nobody in Catalyst cash outs is losing money on Seabridge. And I think everybody should have a position in Seabridge, but when you get in is up to you, because Seabridge is either going to go a lot higher if they make a deal, or it's going to go a lot lower if they don't. And that's why, CJ, we're playing with house money. That's always been the advice. As soon as we doubled our money in Seabridge, I told people, take your original investment off the table. Okay, so we have spreads going in the war room. I know people in Catalyst, people have been making a ton of money on it. Seabridge is not, quote unquote, a pure gold play because it has the optionality of a deal that's coming up. And that makes it either worth a lot more than it's trading for right now, or a lot less if it doesn't go through.
Gotcha. Perfect. Hey, Bryan, throwing it back to you.
All right.
Story stock. And I love the story on this. Go ahead and share it with everybody.
Yeah, big story with Nike, I think, this year, guys. 2026 could be a big turnaround year. We all know that Nike was down almost 20% in 2025. But as I look at the situation, I see a stock that could have a big turnaround year. And my original thesis behind that was the World Cup of 2026, a lot of which is going to be coming into the US. And of course, both Adidas and Nike essentially supply, 70% of the World Cup teams with all of their gears and kits and shoes and merchandise and everything. So that could be one of the first big trigger catalysts to kind of get Nike out of this little, downside slump that it's been over the last year. But, it was interesting. And I talked about this in Catalyst Cash Outs with Karim yesterday during our live episode, is there's been a lot of insider buying that have been coming in to Nike. I mean, their president and CEO specifically, he just stepped in and bought 16,000 shares of Nike, and he paid just around $61 per share. So I see something like that, and I'm like, oh, you know what? He's kind of seeing the same things I am. He's seeing a downtrending stock. He's getting positioned for a turnaround. He's going to use the World Cup to kind of kick the stock back into gear. But what I didn't realize, and this was just news that just broke yesterday, right, is that Nike came out and they signed Annalie Waters, who's this 18-year-old female pickleball phenom, right? Nike signed her to this exclusive long-term contract. And this, in my opinion, is going to be a huge trigger that gets Nike's apparel and shoe sales and really ramps them up. When Dick's Sporting Goods, for example, put pickleball stuff into a little corner of their store, right? That stock had a huge pop just based on that. And now fast forward a year and a half later, and Nike is lucky enough to sign Annalie Waters to an exclusive Nike pickleball contract. This is why the insiders were buying Nike, not the World Cup news. They were going to sign the best, youngest, great athlete, and it's going to, if Nike does this right, it could kickstart their sales in an extremely significant way, because pickleball is the fastest growing sport in the entire country, and Nike is now going to step in and say, we are pickleball. We've got the best athlete. We're going to probably continue to get more athletes, and it's going to trigger sales, and it's going to get this stock out of its slump. So I recommended it yesterday. I continue to like it, whether just buy and hold the stock, buy a January 2027 call option, however you want to play it. But I think it's going to be a big.
Bryan, you didn't tell them the CEO of Apple bought $2.9 million worth of shares.
Yeah.
From Nike. Okay?
Yeah, you pulled up the whole insider roster.
The insiders, they spent a ton of money on it. So we have Nike plays going on in Catalyst. We've got Nike plays going on in the War Room. Hey, if you're not a member, I said we're not going to pitch anything. Sorry, don't worry about it. Ignore what I just said.
I like Nike for the 2026 year. That's my forecast and prediction play for this episode.
Let me talk about a couple of plays just before I leave, because Ron from the War Room, on these EVTOLs, these electric vehicle takeoff.
It's over 4, Kenneth. Duper's over 4.
So Archer and Joby are the two plays in the sector, but this is a US-centric play because they're all getting their approvals to use them right now. So first people have got to use them. But once they get approvals and they get worldwide approvals, the Chinese are going to come in and make these machines for half. This is exactly what they did with the EVs. So in the US, maybe Joby and Archer will have a market, but the rest of the world, they can't compete. They just can't compete. The second sector that I like a lot is the healthcare sector. This is companies like Novo Nordisk, companies like Merck, Pfizer, Lilly. Oh, if you were on last year's
Lilly from last year,
Lilly was a recommendation in last year's call too. It was a $700 when I recommended it at 1,100 or 1069. Okay, so what I like about the healthcare sector is not just the healthcare stocks, but there's a bunch of stocks in the biotech sector that are getting snapped up left, right, and center because all these big drug makers, they need pipelines. And they've got a patent cliff coming up. Pfizer's got a huge one. That's why they bought Metsera. That's why they bought Seagen. Okay, Lilly's picking up, even though they don't need it, they're picking up companies. Merck just might be in a deal for RBMD. Okay, but there's 3 or 4 other ones. One of them we have as a catalyst pick. Don't put it in there, okay? Because I don't want everybody to know about it because they'll send the price rocketing up. We don't want to do that. That one is a candidate. There's 2 more candidates. That sector is going to be on fire. We have trades in the war room on XBI. We sold it earlier this year. The biotech sector just hit, the XBI just hit 52, maybe an all-time high. Okay, money is going out of these different sectors, but it's going into sectors. Where is it going into? Biotech and healthcare is one of the places going into. Industrials are next. Okay, so if you look at the SPY is down today. If you look at the RSP, which is the equal weighted S&P 500, is flat. Okay, that's telling you money is shifting out of the SPY, where the top 7 stocks are all the Mag 7, and it's shifting into all of the other stocks.
Yeah, it's really important, Karim. Just today, I played call options on Amgen inside the war room. Amgen, as I look, is up $3 right now. We already sold our call trade for a winner, and this is all as the market is going down. So the healthcare sector is going to be a really great safe haven. So if Microsoft and Palantir and AMD and NVIDIA, if they all start selling off, that money is going to flow into what is commonly considered a safe haven sector. And that's going to land right with the Pfizers and the Mercks and the Novos and the Lillys and the Amgens. So I love that trade. We highlighted that last year. I think it's even more prevalent this year.
When you talk about reversion to the mean, a lot of these stocks haven't reverted, but their mean is a lot higher. Okay.
Yeah.
Not the Lillys, like Pfizer. Pfizer is not going to do anything for like a year or two, but it's going to pay you a fat dividend.
Yeah.
And we're writing calls against it. But once it gets rolling, the growth, listen, this is how Pfizer works. Pfizer's got a massive marketing machine. Okay, when they get a drug, they know how to market it. Viagra. What's the other one they did for cholesterol? I forget what they did for
Lipitor?
cholesterol. Yeah, Lipitor. And then what they do, okay, is they know how to reach a broad market. So the drugs they have in their pipeline right now, once they come on board a year or 2 from now, that's when you see the growth. And how do you know this? Think about what happened pre-COVID. Pfizer was trading at $25 a share. They had the COVID vaccine that came out from Pfizer, and Moderna had another one, right?
Yep.
Pfizer stock went from 26 to 62 in a year. Okay, and they took the money that they brought in from COVID to go out there and buy Seagen and buy Metsera and stuff like that. But they're facing a patent cliff over the next 3 years, but they've got stuff to replace it. So to me, Pfizer is a longer term play, and we're going to reduce our costs so much by collecting covered call premiums and dividends.
So, hey, Karim, it's a lot of people are probably wondering, we have a methodology inside a lot of our services called the dark ticker. The dark ticker is currently in range on the triple Q right now. So I might have to wrap this and go get that trade out. CJ, do you have anything else you want to cover for our episode here?
You know what? I was going to ask you a little bit about the leveraged ETFs, but we can save that for another day.
No, put that up real quick. Let's cover that real quick.
Yeah, I absolutely love this this angle. Here you go. Boom, boom, boom.
Yeah, this guy.
This is interesting.
Yeah, this is kind of a new methodology that I've been playing around with, and it's been working very well so far in 2026. And this is kind of like the new evolution of where the market is going. You guys can now trade double leveraged ETFs on single stocks. So for Tesla, for example, you could play TSLL, which moves at 2 times the rate of Tesla. So if Tesla stock on any given day is up 5%, the TSLL is designed to be up twice that, 10%. So we could trade these on NVIDIA, NVDL, or Google, GGLL, or Meta, METU, Palantir, PTIR. So I've traded most of these this year, all pretty successful. But the interesting thing to me is kind of when I really start licking my chops is if we do see a pullback, this group is going to pull back pretty significantly, and these 2 times assets long are going to be moving down at double that rate. So put options on some of these, if we start to see a big pullback, could be a great way to make a ton of money very fast off a downside market move. So screenshot this or write these down, put these on your ticker screen, guys, because if we get that pullback opportunity, puts on any of these could be great trading vehicles, great ways to make money in a downside market. Or if I see a support point and see these things jump, we could play calls. We're going to play them both ways. So as long as there's market volatility, these are phenomenal trading assets that represent kind of like the next evolution in leveraged trading on single stocks. And we, again, want to be at the forefront of it.
Sounds good. Listen, I just want to say one more thing before I sign off and go grab another cup of coffee, which I don't drink. Listen, Brian,
you're going to go raid your grandma's like silver drawer and go back down to the shop. Okay.
I wish, So but that's silver plated. That stuff doesn't get as much as a coin. So do you remember we had meetups last year? This is why you guys need to come to our meetings. Okay, when we say we're going to have a meeting, people say you don't get anything for free in life. Yeah, you do, because at our meetups last year and the year before, which were free meetings, we gave away tons of silver and gold coins. We gave away silver bars that were 5 ounces each. Just for attending the meeting. These guys walked away with a half an ounce, quarter of an ounce, 1/10 of an ounce of gold plus all the silver. You're sitting pretty right now.
I should go get those silver coins, Karim. There's a ton of them. Yeah. All right. Remind me next time. I'm going to go grab them.
All right. First of all, I'm going to show up at the meetings just to get the silver and gold. But next, you know what? I'm just going to urge everybody, check out the War Room. Obviously, I love to watch these two banter about, especially when Brian starts talking about Karim spell check in the chat and things like that. Great team. Glad to have you. This is great. Really good. We're going to have to, maybe we'll put together a mid-year version of this as well, just to check in based on what's going on with the headlines and such, because this has been fun. Any closing comments there, Brian?
Closing comments, guys. If there could be, I could have another trade coming out by the end of the day. If you want to trade more actively with us, we have a whole array of services, whether it be Cash Outs Live or Dark Ticker, Post Market Profits, or War Room. We would love for you guys, if you haven't already, to join us, to trade with us, and to find the best opportunities to make money every single day. Yep. I hope the forecast turns out well. Thanks for taking the time to spend with us, and I'll see you soon. Karim?
Yeah. Karim, I'm going to, because it's come up quite a few times, 680 and 600 on that put spread, correct?
That's right. Yeah. 680, 600.
Asking which strikes. Yep.
We will endeavor to send an alert if we close it out. But listen, you're on your own on that trade, because some of you might want to close it out. The market falls 5%. Some might be 10%. It might not go down. You cannot, this is a hedge. A hedge is insurance. Okay. Remember that. A hedge is insurance, like homeowners insurance. If it doesn't pay off, it means your home probably went up in value a little bit, just like
that's a good thing at the end of the day.
Okay?
That's right. And the other point to remember there, because people will be watching this themselves, Brian pointed out, if it happens earlier in the year, you still got time premium on that. Take advantage of it, right?
Oh, yeah.
Don't let this thing go until the end of the year, because all the time premium's gone at that point. All right, guys. Been a great time. Look forward to the next one.
Thanks for having us, guys. Thanks, CJ, for moderating this whatever you want to call it. Forecast.
Are we guests on MTA? Is that what you're saying?
We're guests on our own show, Karim.
We're guests on our own. Okay, thanks. Thanks for having us, Brian and CJ.
Pretty good magic trick, right?
Yeah.
All right.
Have a good one, guys. Thanks.
Have a good one, everybody. Yep, I got it. All right.